Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about the best annuity payout options for couples. So a lot of you who reach out to me are married, or you're thinking about getting married, and you want to make sure that there is joint income coming to your spouse. Okay. And this is very important, of course, because if you don't have other assets set aside for that spouse or life insurance, when the annuity payout stops from a single payout, that's it. There is no more income. Now, if there is something left in the balance, of course they will get that. But unfortunately, the balance is usually small enough where they're not able to generate the same amount of lifetime income. So usually when people are married, they will buy these type of policies. They'll always get a joint option. Now, if your spouse is like 10, 15 years younger, it may not make sense. You might be like, man, that's a lot, a lot less than I was hoping for. And so in those cases, sometimes a single payout is best, but you still have to make sure that your younger spouse has the means, has the assets available or will for more income later on for themselves. That's just kind of it can be a tricky subject to talk with people about, but it's important to talk about because if you are married and you want to make sure your spouse is covered, they're going to want to make sure they're covered, then you want to pick the joint option. I'm going to show you the highest payouts right now that annuity companies are paying. Okay. And if you want to mess with my calculators and kind of play with them yourself, go to johnstevenson.com, check out my calculators, plug in your age, your spouse's age, and it'll spit out all the numbers for you. It'll ask for your email, but it's just to send you the quote. I'm not going to email you. Okay. It's just to send you that. So if you want to reach out to me and you want my help purchasing an annuity, of course, I'd love to help you. There is a link on my website and you're certainly free to do that if you like, or there's a link below this video as well. All right. So let's go to my screen. I'm going to show you a couple who is in New Jersey. They're both the same age. They're both 62. And then they've got $1 million they want to put in. Okay, this isn't all their money. They've got $2 million. And they're like, I want to use half of our assets to buy us lifetime income. Okay, we want to enjoy our lives. We want to enjoy our income. This is what we built it up for. We're not going to be always growing forever and ever and ever for our descendants. We want it for us. We want to enjoy it and we want it now. Okay. Great. So we're putting it into an income rider because income riders typically pay the most for annual incomes. They do have fees, but the fees come out of the account balance, not the income. So typically it's usually the best choice if you're looking for the highest net for yourself. So eventually the account balance will run out. Usually runs out after around 10 to 15 years. But that's not what it's really for. You're buying it for a pension. Okay. So let's take a look. If they were to retire right now at age 62, let's see what $1 million will give them. All right, so we see some accelerated payouts, and then we see payouts that don't decrease. So accelerated payouts, and just fair warning, when you go check out my calculators on, especially the income rider calculator, you will see some of these accelerated payouts from companies like Nassau and American General Life and Ameritas, and they can be quite nice. But they are great for certain reasons, like people will use them to have higher income because they're delaying Social Security payouts, or because they have a pension that's coming in later on, or maybe it's the go-go years and they're like, we want to travel, we want to spend, and we're going to spend less later on when we're okay with that. Then those can be very good policies for that. But you have to realize that when they do reduce, it's reduced for life. So this top one with Nassau, just give you an example. This couple will get $82,000 for about 8 years. Okay, 8 years contractually, and then after that, it's $50,000 a year after that for life. So it's a good strategy if they are going to delay taking their Social Security payouts. Maybe they're like, or maybe not. Maybe you're just going to take Social Security at the same time, and you're like, we want over $100,000, and we're going to spend more, and we're okay with it dropping to 50, which really this will drop to 50, and you still got your Social Security, and maybe that's perfect. You're like, all right, well we want to spend more money now when we're healthy, right? We want to do all these experiences right now, and we're okay with spending less later on. Then this might be the perfect strategy. Or delaying Social Security or pension payments would, of course, replace that lost income from this annuity. These annuities allow you to retire early with more income if you so choose. So if you go back here, I'm going to click the box here, no income reduction. Okay, so we can see the ones that are the highest payouts. And of course, take those ones away that are accelerated, and it'll show us the top ones here, which is Prudential, Ameritas, Nassau has one, American General Life has another, and so on. So they all have options for guaranteed income that does not reduce. So if you went with the top one, it's $67,000. Okay. Never reduces, never goes down. It's always that rate forever. See, 67,650, never goes down. Okay, the balance though, it's gone by the time you're 78. Which of course you're not buying it for that. And if you do die, just fair warning, if you die and your spouse dies, you see over here the death benefit, it will go to your beneficiaries. So it's not wasted money. Okay, you're using this to leverage a huge pension payout for yourself. I mean, if you live till 95, you're taking out $2.3 million. Okay, now we'll go up here and say, well, I don't want to retire right now. I want to retire when I'm 65. So me and my spouse are going to retire at 65. What will this pay us? Okay, pretty high. Nationwide will pay you $92,000 a year. Okay, well, that's great. But what if I want to wait longer? Can I? Yes, you can. Income riders allow you to wait as long as you want. Okay, so if you want to, maybe your plan is to retire at 65, but you think you might work longer, maybe to 66 or 67, and, maybe delay taking Social Security at that age. That might be a better option because it's, exactly what it's going to pay out. I mean, it'll pay out $104,000. That's pretty good. But if you decide to take out income earlier, maybe you activate it at 65, you absolutely can. Okay, you're not locking yourself into any date with an income rider. That's why I love them so much. So you look at this, say, all right, take $104,000 if I wait to 67. But if I decide not to wait to 67 and I wait to 65, you see the same $92,000 here? Yeah. What if I only wait 2 years? 73. What if I wait 1 year? It's 68. See? So that's how that works. And it's very effective for kind of planning out what you want to do. And you'll notice the benefit base grows. And then if you let it grow for 5 years, it's 1.75 multiplied by 5.95, giving you $104,000. It's that simple. So, and of course, just do the math. After 10 years, you've already received your entire $1 million back. And everything's just gravy after that. I love that. Okay. It's just a great way to take a lot of lifetime income. And in this case, if you were to wait till 67 and you did take income till 95, it's like a $3 million payout. Now, again, if you're looking for growth and you're looking for, best growth and be able to leave legacy behind, this is not it. Okay. This is definitely not it. Okay. If you're looking for growth, there are growth options that are fixed index annuities, that are MYGAs. If you want to leave in the stock market, you can do that. There are other growth options that are better. Everyone knows that. It's not rocket science. You're buying a contract when you buy an annuity. You're buying a pension. You're buying longevity risk protection. You're buying the ability to have your time and to retire and to enjoy your retirement, not to sit there and look at your stock account and hope that it keeps going up and hope that if it does go down, it doesn't go down very long, right? Your emotions are not tied to that anymore. Okay, you could still have money in the stock market if you so choose. But for a lot of people, they want to enjoy it. They've been growing it. They've been working. They want to finally take that hard labor, hard work, and sacrifice and use it. Okay, this is your chance to do it. And so if you're looking to purchase an annuity with someone who is transparent, who will show you everything regardless of their commissions, because I'll tell you, there are some of these that pay high commissions and some of them that pay low commissions. It doesn't matter to me. Okay, I'd love to sell you some of these that pay me higher commissions. Okay, some of these down here will pay me way more. Okay, I'd love to sell you them. But they're not going to give you as much income. I mean, I could sell you this one down here. So give me $30,000 more in commissions right here if you buy that, okay, versus up here. But again, I'm going to show you, hey, you should probably get Nationwide, okay, because it's a good company. They're 100 years old, and it's the best thing for you, okay? So if that's what you're looking for, I'd love to help. There's a link below this video. It goes directly to my calendar. And of course, if you want to check out the annuity payouts first, then go to my website, johnstevenson.com, check out the rates, check out the payouts, and then if you feel comfortable, reach out to me, book a call there, and we'll chat. So I'd love to help you purchase one if that's what you're looking for. If not, enjoy the channel. Hopefully you're getting your questions answered. If you're not, make sure you comment below so that I can answer them. And please like, subscribe, share, and I look forward to seeing you soon.